My phone actually never stopped ringing this past week after I released the video of the impact of the repo rate on the people that want to actually buy their houses and people that actually wants to sell their houses. So I actually got so many calls from people that are actually currently owning houses asking me, how does this rate change affect them? So this video is just dedicated to you guys that I actually explained on the phone. So now I'm gonna explain again here for the rest of the people that actually asking themselves the same question to say, I'm a current homeowner, the repo rate has changed, the prime lending rate has changed, has been increased. How does this actually affect me? Okay, so we have spoken about the repo rate. I'll just briefly explain it that the repo rate is the rate that the uh, Reserve Bank uses to charge on the major banks, like the banks like Standard Bank, FNB, ABSA, and all the other banks, okay, like Netbank. And then the prime lending rate is the rate that these major banks they use to charge me and you as the consumers, right? So if you currently have a house, you are a homeowner, and you have taken a bond on that house, like which means that the house that you own or you partially own partially belongs to the bank, right? So what it means is that there's two ways that you can get financed by the banks. They can finance you with what we call a variable interest rate and a fixed interest rate. So if you have taken a variable interest rate, it means that every time the prime lending rate or the repo rate changes, whether going up or down, it affects you. So that up or down, you will see that adjusted in you as well. So which means that for current homeowners that have a variable interest rate, they will see that the installment will now start to go up. So that's how it affects you, right? So it means those 4 or 5 interest rate hikes that we are anticipating, they are going to definitely affect you. So it means owning your home is only going to become more expensive from here because you will pay more in terms of the installment, right? So for those people that are actually financed through what we call a fixed interest rate, how it affects you is that on a fixed interest rate, when you take that bond, right, the bank, what they do is that because they are taking sort of a risk, so they charge you a bit more expensive than a variable interest rate. In that way, they are sort of promoting that you should actually take the variable interest rate so that when times like this, then they make more money, right? But if you have a fixed interest rate, you are not affected by the increase on the repo rate and the prime lending rate. So, which means that you will not see an increase or a decrease of your installment. So, everything for you stays the same. So, I hope I've really clarified this for everyone, and everyone now really understand. And I'm sorry for the guys that I didn't cover on the previous video, but I thank you for your call. It means a lot to me. And guys, if you like this content, please like, subscribe, share with your friends, and then comment and give your ideas and all that. Or you can question, or with other people, they can actually give me a call. I'm here for you always. I will see you next week. Cheers.